Crypto Hotep here with another investing video. We are on week 21, guys. Week 21 of the family portfolio and dividend tracking with M1 Finance. So if you're unfamiliar with the updates and the tracking of these updates, feel free to go to week number 1 in my channel. It's underneath the investment journal and watch that video. I think that video is the most popular one on the channel, and basically it describes the methodology that I went through to develop this system that you see right here. So in a nutshell, I made a short list of stocks for my family for them to choose from. They chose the stocks that they felt were most important to them or that did have value. And then we used M1 Finance as our broker to place these stocks into pies, which basically encompassed our whole family portfolio. Each pie is designated to that family member and his or her stocks. And then every week we go over the balances, we go over any dividend activity, emotions, our strategies, how we're feeling, and just tracking the overall investment journey. First and foremost, these videos are for myself, my edification, and as well as my family. And just for tracking the investment journey with my family, and hopefully they see these videos whenever I'm gone, and hopefully these videos are educational. If they're educational for you, fantastic, but this is not financial advice at all. Feel free to consult a professional if you want to trade or invest in the stocks, crypto, anything like that. With that being said, I'm going to try to get through this video in the shortest amount of time because I know that most of my videos are like 15, 20 minutes long. So I'm going to try to get to this one quick. Now, before we go to this week's balance, we go to last week's balance and see what's going on. So last week we were at 766.31. We had a weighted rate of return of 7.41%. Dividends were $4.69. So this week, let's see where we're at. So we're at 793.32. Okay. We have hiked up a little bit on our dividends, so $5.06. We'll see what's going on there. And then our weighted rate of return has bumped up 2 percentage points at 9.50 or 9.56. Overall, what we'd like to see is up and to the right, and we'd love to see that. And I always like to look at this chart because this chart is kind of how investing is. It's a journey. You know, it starts low and then you can just gradually increase as you go over time. Investing does take time, and the results you probably won't see very quickly. It's kind of like health and fitness, if you will. You know, people want to look a certain way, but sometimes the gym, sometimes they don't get the results from the gym as quickly as they want to. That's because that just takes time, So same thing with building wealth here, what we're trying to do. So let's go to the activity here. So I would say from last week to this week, we had a little bit activity here. So we had McCormick and Company, 3 pennies for the dividend. We did have several buys here. I believe I went over that last week. We did have an additional buy here. What was this? Coca-Cola. So this was for me. I did buy some Coca-Cola. And then we also had, today we went shopping. So we bought some Google, Target, Costco, Nintendo. You guys know those are the kids. Domino's Pizza. This one is for me. I designated this one for myself. I wanted to buy Domino's Pizza. Their price is in a good level right now. And Amazon. Okay. This week in particular was a big earnings week. All the big players had earnings come out, such as Amazon, such as Apple, such as Coinbase. All those companies had earnings coming out. And it was a mixed bag, to say the least. But we will go through the stocks here, top to bottom, as we always do. And my wife is on the bottom this week again. As you can tell just from the chart here, it's been kind of a wild journey here. And that's, as we all know, if you've been following it, is because of Celsius. Your screen is not wrong. That is a loss return of 53.38%. Then also we have Google making up for it over 16% here, and then Pepsi almost at 5%. We're going to jump right into this. I also mentioned, and I looked at Celsius, I believe it was last week or so. And we did see Celsius at a certain key level. And I did note that, hey, we could see a little bit of downside with Celsius, but I think the key level, the way it's oversold, I think we still keep buying, and I do think that the company will rebound. We're still holding Celsius in my wife's portfolio. So, it is having a rough time right now. I'm not too worried about it, in all honesty, but we'll still keep holding that. Let's go to our middle. Our middle is up a very nice over 4%. We have 5 cents in dividend here, and just pretty good portfolio here. Pretty good traction being made here. So Costco up over 12%, Amazon 3.5%, Nintendo down a little bit over 1%, and then Target only down a little bit more than 0.5% right there. Nothing too major that's standing out there. Let's go to our youngest, and this is a change because our youngest was second to first for the past couple of weeks because of Tesla. Now they've dropped a little, but still at a weighted rate of return year to date of over 16.5%. You can't be mad at that. Tesla, we're still riding the wave with Tesla. Again, this was one of those stocks that reminds me of Celsius right now. So Celsius has a lot of FUD right now. They're deep in the red right now. But we steadily started buying or kept buying in, little bits and pieces here of Tesla, similar to how we're doing with Celsius. You just have to give it some time. There's that word again, time and investing. And price literally came back around for Tesla. And so that's why we're riding this wave right now. Apple had very impressive earnings this week. They had a double beat on earnings per share, and also beat on revenue, which was fantastic. A lot of people also was counting Apple out because of that Vision Pro device that they brought out, that I thought was not a good business choice, not in this climate, not in this economic climate. And then also they did miss on one of the earnings, so people were kind of counting Apple out. But as always, a couple rules that I have with investments are: you don't bet against Apple, you don't bet against Coca-Cola, you also don't bet against Coinbase either. Starbucks is down. I don't mind it. We're still buying Starbucks. Starbucks is at a fantastic price, and it's still a good company in my book. Just needs some turnaround there. And then we have our oldest. Our oldest is second to first here, and weighted rate of return of over 12.5%. Dividends, quarter dividend here. And let's see what we have here. So, as we all know, our oldest wanted to add another stock, Costco, into their portfolio. And we did that accordingly last week. So we started adding to that pile here. That's why you see kind of the disparity between those values here. We're adding more to Costco to help even this out, so we're not so bloated on the McDonald's and Apple side. And so that's just going to take some time. Apple up over 30%. You can't beat it. And then McDonald's down 1.5%. I think McDonald's is also at a key level as well. I think they're on the verge of turning around, or we may see a pop in Apple or in McDonald's as well. They also are double downing on that $5 value meal. that they did unveil. So they said that's just the tip of the iceberg. So I think they have some things up their sleeve there to help combat inflation, help also combat people not wanting to spend as much, and kind of doing what McDonald's does. And then last but not least, let's go into mine. And right now, I have above 7% weighted rate of return, $4.59, dividends earned. And it's been a good week. It has. On the technology side, NVIDIA caught some steam again this past week. So, up over 20% on NVIDIA. Apple, as I just said, you don't bet against Apple, up over 32%. Google caught big, up over 29%. Coinbase, we are down a little bit over 1%. Not really worried about that. Amazon, which had fantastic earnings, up over 5%. And all in all, pretty well. Meta did have fantastic earnings as well. I think they had a double beat. They beat on earnings per share and revenue. Just crushing the game right now. And then AMD has had a hard go around, 38%. They've had a downfall. Today was a downfall of many stocks, AMD being one of them. Let's see what we have here. Consumer staples up over 3%. Industrials and energy up over 5%. Finance up over 12%, as well as real estate. This is very good. So, when we talk about finance, we're speaking primarily, these are the four that I have: Aflac, Moody's Corp, American Express, and Visa. A very good stable of dividend related stocks in the financial market. So, not mad at this portfolio at all. And from the real estate, restaurants and food up over 2.5%. Pharmaceuticals up over 9%. And I believe that was, if I'm not mistaken, we had Johnson & Johnson and Pfizer here, both in the green. Real estate, I will say, I know one of my real estate holdings did have earnings, and they did blow their earnings out of the water, and that was Federal Realty right here, FRT. They did have earnings, I believe it was today actually, and they beat on both. So I'm expecting some more growth in that, on that price as well for them. And then last but not least, let's not forget the stocks in the meme stocks. But as you can see, you can, on M1 Finance, you can allocate percentages that you want the money or your funds to go to. So for instance, as you all know, these are my stocks, Dad's stocks. It's within this family portfolio here. And if I had $100 and I said, you know what, I just want to buy $100 worth of these stocks here, all of them within each sector, I could hit the buy button, put the 100 in, and then buy as many stocks as I can that spread across all of my holdings, which are about 50. Okay. Now, here is the actual target that relates to that. So say, for instance, you had $100, you'd say, hey, okay, out of that $100, 20% needs to go to technology, 20% needs to go to consumer staples, so forth and so on. The big thing with stocks or meme stocks is I did want exposure to them, but I only wanted limited exposure, just 3%. I don't want my whole portfolio to be dictated off of meme stocks here. And as you can see, we are down over 6% on the meme stocks. I have Robinhood, DTE, Palantir, UPS, and CrowdStrike. CrowdStrike being the main culprit here, over 41% with that outage that occurred. You know what? Still holding Crowd, still buying Crowd. UPS down over 5.5%. They did give some weak outlooks and guidance on their earnings, so that makes sense. DTE actually did have great earnings. They're up over 11%. Palantir up over 9.5%, and Robinhood down over 5%. So again, it's good to be diversified and to kind of spread out that risk. And so, if you really are taking that investment journey serious, I don't I don't mind people delving into those meme stocks at all. You just have to be very smart about it and maybe turn down the actual allocation of the target and make it a minimal risk for you. And with that, guys, being said, we're going to cut this video. I'm at 15 minutes, which is good time. But as always, if these videos were helpful, please comment, like, subscribe down below. Let me know what you guys want to see. Let me know what you want me to talk about in the next weekly update of the family portfolio. Thanks, guys. And as always, happy trading.